Welcome to the CBH Structure and Governance Review. By now you should have received the booklet the board has been working on for some months to bring this rather dry but incredibly important subject to life. This video also helps to bring some further information so that you can consider these two subjects and provide some important feedback back to the board through a forthcoming survey. Last April we came and spoke to growers about the future structure of CBH and whether growers wish to spend time looking at that and making some decisions themselves about the future structure and governance of the cooperative. We've just recently completed a round of grower meetings to cover the same subject, as well as reinforcing a booklet that the board has produced. We will be following that up with a survey looking for your views and feedback to the board on how you feel the business should be structured and governed in the future. Before I look at the first of those two subjects of structure, I just want to talk about your cooperative now. Many cooperatives review structure and governance because sometimes they get themselves into trouble. That is not the case with your cooperative. CBH is a very strong business. It's Australia's largest cooperative. Indeed, it's Australia's second largest private business with $3.5 billion turnover. We have a very clear focus for the business. It is the dollar per tonne charged to growers minus rebates. It is an absolute focus for the entire management team of what's important and why we come to work. To do that well, we focus on 5 key strategies. Lowering the transport costs from farm to port. Ensuring your network is the most efficient possible. Ensuring that the costs and overheads of the business are also under control and benchmark well within the industry. We're also looking at how we increase rebates to further defray the cost of storage and handling, as well as ensuring your marketing and trading business remains strong. When it comes to structure, there are 3 main building blocks that make up the structure of any organisation, be they a corporate or a public listed company. And those building blocks are ownership and control, how value is generated and returned within that organisation, and what access the owners have to the equity of the business. I'll cover each of these first and then talk about them in relation to the 3 possible structural alternatives that you are asked to consider. When it comes to ownership and control, at the moment, CBH is a non-distributing cooperative. You are the user, the beneficiary, and the owner of the business, all wrapped into one. You are the sole beneficiary. If we move to another structure which might introduce other investors or your other ownership of parts or all of CBH, you may move from being the sole beneficiary to the primary beneficiary. Over on the right-hand side of this continuum of publicly listed companies, the beneficiaries are those who own shares in the organisation. When it comes to how value is generated and returned, at the moment under the current CBH structure, much of the value you gain is on the farm. CBH sets out to run a low-cost supply chain, and our fees are low compared to other systems in the country. That reduction in fees gives you a benefit for every tonne you deliver to the business immediately in real time. That is how your on-farm value is benefited by the way the company is currently structured. If we move to some other variants of a cooperative and distributing cooperatives, there may be different ways that value comes back to you. Some of that might be partly on-farm, and some will be through other instruments whereby you may own a part of the business more directly. Finally, for a publicly listed company, that value will be held and generated within the business and returned to the owners through dividends and the capital appreciation of the shares. When it comes to access to equity, currently in CBH there is equity that's held within the business, which we would refer to as collective equity. It's the minimum amount of equity we require to run a low-cost efficient supply chain. In some other variants of cooperatives, that equity partially may be transferred to other entities that you may own more directly. And finally, with a publicly listed company, the equity is fully held and transferred to that new organisation and reflected in the value of shares on the market. If you now consider the 3 structural options that are proposed in the booklet, they are a non-distributing cooperative and a distributing cooperative and a publicly listed company. In WA, if you wish to be a cooperative and register under the Cooperatives Act, you have to decide to be whether you are a non-distributing cooperative or a distributing cooperative. You have to choose one of those 2 variants. I'll come and talk about the first of those now, the non-distributing cooperative. Under this model, control is 100% grower-owned and controlled supply chain. absolutely focused on creating returning value to growers. And your control is expressed through one member, one vote. Value is achieved through low fees and good service levels. Surpluses can be rebated based on tonnes delivered through patronage or reinvested in the business. In WA, where you are registered as a non-distributing cooperative, and for us within our constitution that we exist to deliver benefits to all growers and exist to deliver the benefits to the WA grain industry as a whole, we secure tax and rate exemptions for your storage and handling business. Those tax exemptions are probably worth about $25 million a year on average over the last 7 years. This will vary depending on the size of the crop and our profitability, but on average that's been about $25 million a year. Equity in the business is held as collective equity. It's held by all the growers and is there to do the job of run the low-cost supply chain. Tax exemption will contribute to that retained equity, but again we only wish to own as much as required to run the business efficiently. Other than that, equity is reflected in the value of your farm, through the farm profitability being enhanced by the services and prices that CBH offers. The trade-offs of this model are that as a non-distributing cooperative, we cannot pay dividends to members. Shares remain at a nominal value of $2, but these are not meant to be a representative of the equity. They are meant to represent a membership fee. But through this, the equity in your business is less transparent to yourselves. And we have limited ability to raise equity capital, although that is not an issue for your CBH. As I've mentioned before, it's in strong financial health. There are enhancements that we can bring in for this model, such as enhancing the rebate program with smoothing or banking options. We could introduce cooperative capital units so members can invest in the cooperative, and we can consider options around what's known as purpose in perpetuity, where that collective equity is preserved for current and future generations. The next model is the distributing cooperative, and there are many variants of this style of cooperative, and many of the names may be familiar to you, such as WAMCO or Murray Goulburn or Namoy Cotton. Growers will still retain ownership and control of the business. It still can be remaining focused on creating and returning value to growers. And voting remains one member, one vote. The only way for that to be changed is for the cooperative to actually come out from under the Cooperatives Act and become a company. If it does that but still retains a cooperative constitution, it is possible to have patronage-based voting. These models provide additional flexibility for value return to growers. Value can be partially on farm through lower fees, but partially through profit distribution, where growers may own parts of the business more directly and have shares and dividend flows from those. This allows for some form of equity participation in all or parts of CBH. And equity can be redeemable or transferable, and that can be limited to just growers, redeemable to the parent, or transferable even to external investors. The trade-offs of this model are that 100% focus on growers may be reduced somewhat if there are external investors introduced into different models. There is a possibility of redemption liability building in the cooperative. That has happened for other cooperatives, and this is just something that needs to be aware of and ensure that whenever writing the rules for a new cooperative style like this, that this is taken into account. Moving to a distributing cooperative structure will mean the loss of tax and rate exemptions for the storage and handling business. These types of structures can introduce some structural complexity, and again, where investors are introduced, some tension between the needs of the grower and the needs of the investor. The final model is the publicly listed company. This is a model that's actually quite well known to everybody, popularly used all around the world. It has a very clear focus on the investor. It would be 100% investor-owned and controlled supply chain, and focus, quite understandably, would be on the profitability of that business and returns on investment. Under this model, it would be one vote per share. Value would be transferred from on-farm forms of value to value in the CBH business itself and the value of those shares. The owners of those shares would receive dividends with franking credits and some tax benefits. Network investment, of course, would need to meet those investors' returns, as you would wish if you were the shareholder in that business. At this point, equity is transferred and value is reflected in the CBH business and the value of those shares. And that equity is immediately tradable in a highly liquid market. It's transparent as to the value on a daily basis, and you can hold that equity on your balance sheet. The trade-offs of this model are a loss of grower control of the CBH supply chain, again the loss of the tax and rate exemptions for the storage and handling business, and the collective equity that's being passed on between generations would now transfer into this new entity. And there would be a loss of the cooperative principles by which we consider and think about running the business. So in summary, you can compare the three models of the non-distributing cooperative and publicly listed company through the lenses of the three building blocks of control, value and equity. For control, under the current non-distributing structure, you are the sole beneficiary. As you migrate to a distributing cooperative and variants of that, you may be the primary beneficiary, but you may introduce other beneficiaries at that point, through to investor-only beneficiaries as a publicly listed company. Under value, under the current CBH model, much of the value is distributed in on-farm value on a yearly basis through the tonnes delivered at low fees and high service levels. In other variants from this, there would be a mix of both. And finally, under the publicly listed company, all the value is created within that business and reflected in the value of the shares and the equity of that business. When it comes to equity, currently there is equity retained in CBH, around $1.6 billion, and that's what we need to run a low-cost efficient supply chain. Any more than that should be returned to members through low fees and good services. Under the distributing model, there would be some partial transfer of that equity. The growers would then start to own some of that equity more directly. And finally, under the publicly listed company, a full transfer of the equity into the new entity. I've mentioned the trade-offs for each of those, and clearly there is no right answer. This will form part of your own personal opinion and perhaps where you are in the stage of life. But fundamentally, we are looking for your feedback on your preferences between those structural options once you understand the trade-offs and opportunities that each of them bring. So let's now talk about the governance of CBH. There are 5 key elements that make up the governance again of any cooperative: the board size and composition, director eligibility and board experience, how member directors are elected, the use of the Growers Advisory Council, and eligibility for membership. When it comes to board size and composition, the current board is made up of 12 directors. 9 of them are member directors, and then there are 3 independents selected by the board and ratified by members at the AGM. Your current board is all male and 49 years of age or older. The questions we want you to consider when it comes to board size and composition are the size of the board. Smaller boards can be more nimble and reduce the risk of factions forming. Larger boards offer greater diversity of experience and reduced workload burden on individual directors. The Cooperatives Act only stipulates that the board must have a majority of member directors, so the 9-3 split can be adjusted if that is something you wish to do. The other question we wish you to consider is, does the board reflect the diversity of our membership base, and is there anything needed to be done to address that? When it comes to director eligibility and board experience, we currently have no stipulated level of minimum skill or experience required to join the board other than being a member of the cooperative. There is no maximum age limit, we have 3-year terms, and there are no maximum number of terms to be considered. Some boards operate skills matrices where they look to recruit board directors that have a broad range of skills. Directors with strategic skills, legal, finance, risk management, IT, to ensure that they have a mix of skills across the board. The questions we are going to ask you in the survey and ask you to consider as you're reading the booklet are you happy with the skills mix that's on the board and how that's derived, and are there things that could be done to improve that if you felt necessary? When it comes to director elections, we run a district-based election system. We have 5 districts. There are 2 directors elected from districts 1 to 4 and 1 director from district 5. The advantages of having district-based elections are ensuring geographic representation of members, ensuring all regions have a voice and regional issues are brought to the board table. The disadvantages are exactly the reverse, that the focus becomes too much on regional issues, and sometimes it might be difficult to ensure the board has appropriate range of skills and diversity when needing to select only from particular districts. The questions we'd like you to consider when reading the booklet are, should we change the district-based system? Would it be worthwhile reverting to statewide elections, or are there other combinations of those that might produce a better outcome? CBH operates a Growers Advisory Council. 15 councillors are appointed by the board as a subcommittee, ensuring regional representation, and they provide the board and the management team with strong member feedback and views on new products and services. They help us prioritise our work and test ideas before we take them to the board or bring them to growers. This has proven to be a very effective additional method of seeking feedback from our members. Questions we would be asking you to consider are: is the composition of the GAC made up correctly, and are there any other improvements we could make to that body? Finally, the last element of governance is eligibility for membership. This is not eligibility to deliver grain to the system. Any grower in the state, be they a member or not, can deliver grain to the system of any size of grower. This is eligibility for membership. Eligibility to stand as a director, vote for a director, make rule amendments and structural changes as the ones we're considering right at this moment. Current eligibility for membership is to have delivered more than 600 tonnes over the previous 3 years and have had an involvement in the actual production of the grain delivered. Again, the questions we wish you to consider are: is the 600 tonnes limit appropriate? Should it remain as is, increase or change in any other way? Historically, that has been defined by the cooperative over its history as tonnes required to be a commercial grower. So in summary, there are 5 areas of governance that I've just gone through, and whilst it's again quite a dry subject to consider, it is crucial at this time that you think about what's important for your business to succeed in the future, meet those strategies I spoke about earlier, and deliver the low-cost and efficient supply chain that you require it to do. The next steps from here are, if you haven't yet done so, please read the booklet and ensure you understand these important issues. You'll be asked to take part in a survey. It should take about 30 minutes, but that's what's needed to get really good feedback on these crucial issues. After that, the board will consider your feedback between now and the end of the year. Our intention is to be back out to you in 2017 with any recommendations for change that are required in structure or governance. So happy reading, and we look forward to working with you on the next steps of structure and governance for CBH.